Hey guys, so cause of time, allow me to start. Sorry for starting late. I think I'm 15 minutes late. We're just setting up over here the technical side of everything, and it's all set and done. But welcome all. We're going to have a good time. I'm going to show you guys the importance of creating a trading plan. Then towards the end, just mute yourself. Then towards the end, I'll ask questions, and you guys can ask me questions, and I'll answer for you. Okay. So, but apart from that, I'm here at the office. I'm here with the boys. Everyone is still here. We're still in the office. We're always here till late night. So no rush, nothing much, and enjoying ourselves here at the office. So today's topic, as we shared, was on a trading plan, how to create a good trading plan, a professional trading plan that can help you achieve your goals. So I'm going to teach you how to do that, how I normally do it here at FUB. We came up with a template that we've been using for quite some time for both the trading journal and the trading plan, but today's focus is on a trading plan. But everywhere trading journal, we use a certain template which we created here, and we use it most of the time. So I'll show you a bit of it, but let's pay attention to what a trading plan is and why you need a trading plan in your career. Okay, so allow me to share the screen. I have a presentation set for you guys, so that's where I'm going to start, and that's where we're going to focus. So sorry about that, one sec. So there we go. So I'm presenting. Yeah, I believe you can see what I'm presenting. Okay. So this is Canva. So we normally use Canva for most of our presentations. They're quite good, it's much better than using the what is it called? I've even forgotten what it's called. The Windows one, PowerPoint. Yeah, PowerPoint is quite outdated, but here it is. So how to create a trading plan, okay? How to create and write a trading plan. So as we kick it off, what is a trading plan? So most of the things that I've used in my definition of almost everything is mainly from a personal understanding of these things. So you'll find that most of the things I've written here is in my own opinion, okay? Not that I've researched from anywhere. With years of experience, we've gotten to understand how to approach the market differently and also give an understanding in our own terminologies, okay? So what is a trading plan? A trading plan, in my own opinion, is a detailed roadmap that will help a person achieve their trading goals within a certain time frame. So it's very important to know those things that I've underlined. Trading goal, okay, within a certain time frame. So if you have a goal, is it to make 10%? Is it to make 20%? Is it to make 5%? And what is the time frame? We can all achieve 5%, but maybe it can be within a year, it can be within a month. Some people can achieve it within a week. So you need to be very specific when it comes to creating a trading plan. It might sound simple, okay, but it is very, very important. Some people will say it's simple and negate it, saying, what's the point of me writing a trading goal? I can achieve my goal within a certain time frame without having a plan. But you'll get to see the importance as we continue in this presentation, why it is very important to create a trading plan that is in line with your trading goal, okay, as well as your trading your certain time frame that you're looking to achieve that goal. Trading plans are different from one person to another, as well as in different trading organizations. That is why it is hard to copy someone else's trading plan and be good at it. What do we mean? You can never be the best copycat that's out there, okay? You can never take another person's trading plan and become very good at it. That doesn't happen. It always comes down to you. What is your plan? We're all different. We all have different risk appetites, risk profile, okay? We all have different personalities, different characters. Some people are aggressive, some people are conservative, some people are fearful, doubtful, some people are greedy. So all these people are going to use a different trading plan. For example, I'm very conservative and I'm very patient. So those two things work in line with my strategy. My strategy is very long term, and it needs me to be very patient to wait for either outcome, either as a stop loss to be hit or a taking profit to be hit. I'm quite comfortable with holding trades for 1 week, 2 weeks, and even a month plus, okay? So it all comes down to you. So trading plans, as I said, are different from one person to another, as well as in different trading organizations. What do I mean? We've seen different companies, different hedge fund. You can see Ray Dalio, the likes of Bridgewater Associates, Paul Tudor Jones, PTJ, Ken Griffin, Citadel, with all their companies are very huge companies, hedge funds which are trading in the markets, looking at the same markets, but they all have a different trading plan and they're all making quite substantial returns in the market. So it differs from people, so it's not a must to copy and have the same trading plan as a one person. I normally see people, like the other day we were talking with Taras that the 13F filings came out, and normally when you go to different sites like wellwisdom.com, which is a very good site, is where people are normally looking to see how the big players trading, how they investing, and how can we copy them, okay? But it's normally a very lagging indicator, very much of a lagging indicator, because the 13F filings come after 45 days of the first quarter. So during that time, these hedge funds might be out of the trade, might be still in, might have gotten in earlier than you're getting in. So it's very different. You can't copy someone's trading plan and become good at it. At the very end of the day, you need to be original and create your own trading plan, okay? A bad trading plan is better than no plan. We keep saying this a lot, and I say it in my class. A bad trading plan is better than no plan. Why? Because if you have a bad trading plan, you can know when to correct it. You can know that your trading plan is actually bad. But when you have no plan, you can never even know when you're lost. Okay, that's another quote. When you have no plan, you can never know when you're lost, because you don't know where you're going. And how will you know you've gotten to where you're going if you didn't know where you're going? Okay, so a bad trading plan is better than no plan. When you start off in trading, you're going to have the worst plan. I remember my plan we normally look back at our plans, they used to look so weird, so bizarre. Okay, they're very outdated. We even wondered, how am I going to make money trading off this trading plan? It's because a trading plan is always in motion. You're always creating and adjusting your trading plan to fit the new you, because you're always evolving in the markets, and also in line with the new markets that you're trading, because the market is also always evolving. Okay, so that's just a quote along the way. Why is a trading plan important? Okay, very important to note. I have 4 pointers on this. A trading plan is important for various reasons. Number one, it keeps us objective and tries as much to reduce human fallibilities, which is your human subjectivity, while making trading decisions. So when it comes to trading, we all have human weaknesses. We all tend to fall for greediness. We tend to fall for fear of missing out. We tend to become overconfident. Sometimes we tend to become doubtful and very fearful. So we're normally having a roller coaster of emotions, and it tends to lead us not to be very objective in the market. Whenever you take a trade, we were talking about this with Taras earlier on today, when you execute a trade, that's where subjectivity tends to take place. Your objectivity is out of the window, subjectivity comes in. So you need to have a proper trading plan that is going to put you in place whenever the market starts doing what the market does, because the market can do anything. You need to be prepared for that using a proper trading plan. Okay. Number two, just like a map, a trading plan can help you whenever you're lost. Okay, so when you use a map, when using, for example, Google Maps, these days we've gone very digital. So I don't hear anyone using the physical maps anymore. So whenever you are lost and you have your phone, you can go into Google Maps and just search where you are. How can you correct the path and get back to track to get to where you want to go? Okay, so just like a map, a plan can help you know when you're lost. So whenever you're starting to, because your plan will also tell you whenever you're over trading, whenever you're taking too much trades, because you're more or less back tested your system, so you know when to take a trade, when not to take a trade. So when you're taking too much trades, the system will tell you that you're over trading. So you want to know that earlier on. Okay, so just like a map, a plan can help you know whenever you're lost. Point number 3, without a trading plan, it is hard to tell whether you made money because of a flow or a good strategy, therefore making it harder to review your trading performance. What do I mean by this? When you do not have a trading plan, you can never know if you made money on a good trade or on a bad trade. Remember, markets at a very micro level are very random. So whenever you don't have a trading plan and you take a trade and it becomes a winner, it can be a very bad trade, but the outcome was a very good winner. This is not a good habit to build whenever you're trading. Okay, you don't want to be taking too much trades you don't want to be taking actually any trade without having a plan, because you want to know if you did a bad thing or a good thing. This is why people get addicted to trading earlier on when you're starting to trade, and I'm sure most of you can relate to this. When you start trading earlier on, you start executing trades, okay, and in these trades you tend to make very good returns, double your money, maybe even triple your money. Your money you had $1,000. I've seen many people grade to $10,000 without understanding what they're doing. Okay, that's a about a 900% return, a very huge return on that. But at the same time, they are doing what they don't understand, and what is the end goal? They end up blowing the account in the long term, okay? So, but whenever you have a trading plan, you'll know when you're doing something good and you need to continue doing that. And whenever you do something bad, you can always go back to the trading plan and see where you went off course, okay? And last but not least, when you visualize a goal and create a plan to achieve it, you stand a higher chance of achieving it than he who has not, okay? This is very important because here we're talking about visualization. Many people might ask, how is this related to your trading plan? Remember, when you have a goal, you've not yet achieved any goal. So a goal is always in the future. It's always somewhere ahead, not something we've achieved. So it's always visualizing something you want to achieve, and it can be different. In trading, maybe you're looking to get a certain percentage return every month. It can also be to stop losing. Some people are consistently losing. Maybe the goal first is to get to a point where you stop losing. So that's also visualizing a certain goal. So whenever you visualize that, the next point is to create a plan to achieve it. You'll stand a higher chance of achieving it than he who does not visualize it, okay? So those are very important points to take. There are many other reasons why a trading plan is important, but for now, I wanted to stick with those ones, okay? Components of a trading plan. So now we're sort of getting into the chunk of the meat. What does a trading plan entail according to my own perspective, my own opinion? A great trading plan has a great trading goal, okay? You need to have a goal in your trading plan. Number two, you need to have a great trading plan in itself. So definition of your plan, okay? So don't confuse the two. This is sort of like a subset of the main trading plan. So you need to have the plan itself. What is the plan to achieve this certain goal? Number three, you need to have a great trading strategy, a back-tested and a forward-tested strategy, okay? So this is the strategy you're going to use. It defines the laws you're going to respect while you're trading, okay? We'll get into deep into all of this. Great risk management framework, that's number four, okay? That's one of the things that a trading plan entails. And last but not least, great trading philosophies, as well as psychological framework to help you remain psychologically aware of what you're doing in the markets, to be aware of yourself and also of the masses, okay? So we're going to talk about this. When you're trading, I like philosophy, and in trading, you get to learn a lot of philosophy and how to approach the markets in a philosophical way. Whenever you actually read these books of great traders, Paul Tudor Jones, George Soros, Reminiscing of a Stock Operator, that's Jesse Livermore, Ray Dalio, they don't even talk much about their strategies. They talk much about the philosophies and principles that they've been able to build along their trading career, and they use it to make profitable returns in their trading careers as well, okay? So one trading code before we get into the chunk of the meat: give me 6 hours to chop down a tree, and I will spend the first 4 hours sharpening the axe, okay? So just to repeat that, by Abraham Lincoln: give me 6 hours to chop down a tree, and I will spend the first 4 sharpening the axe. Many of you have heard about this, okay? But I also take it and use it in trading. Whenever it comes down to trading, taking any trade, executing a trade, that's the easiest part. It's just pressing the buy button or the sell button. But the hard work is in the back test, okay? Doing the things behind the scenes. How are you preparing yourself mentally? What back test are you doing? What forward test are you doing? What risk parameters do you have in place? How are you preparing yourself in the morning before the day starts, okay? This is where the hard work is, and we normally say this a lot. Real trading is boring. Okay, it's so repetitive. You need to do the same things over and over again. You don't wake up today in your moods, in my feelings, deciding, okay, today I want to take a trade, today I won't take a trade, today I don't feel like it. Markets do not allow for those complacencies. You need to be consistent day in, day out, even on the weekends. If you go out in the weekend and party Saturday and Sunday, you wake up on Monday with a hangover, trust you, my friend, there's a very high chance you're going to have a bad week that week. And even if you have a good week, it means you can make good trades. You can get good returns by making bad trades, okay? You don't want to be doing that. So that's why I have this quote, and I live by it. Always preparing. If you come to the office, if you come and visit us here in the office, you won't even find us most of the time. You won't find me taking a trade or tell you, you know what, stay away, I'm trying to execute a trade. It's always in the back work. You'll find us back testing, preparing, writing our journal, going through our trading plans and all that. So that's what I'm going to take you now through within my trading plan. So point number one, let's now get into the chunk of the meat and get into the pointers, okay? So trading goal. And these are all my definitions in my own perspective, okay? A trading goal is simply a set a trading goal is simply a set target we have in mind that we expect to achieve through trading, okay, within a certain time frame. So if I repeat that again, a trading goal is simply a set target we have in mind that we expect to achieve through trading within a certain time frame. I repeat this again because the certain time frame is very important, because you cannot have a goal without having a defined time frame of when you want to achieve it. For example, if you want to make $1 million, what's the time frame? How can we work towards it? If you want to make $1 million, right now you're very broke. You want to make 100 million Kenya shillings within the next 1 year. I'm not saying it's a very impossible goal, but it's a very, very ambitious goal, and you need to set things in place in order to help you achieve that, okay? We need to be very, very realistic when we're setting our goals, okay? And I keep saying it here, I've even actually said it here, it should be a goal that is well attainable and not over ambitious. For example, having a goal of consistently making 10% a month all year round, that means you're making 120% year in, year out, that is 10% a month, all year round, while you are currently losing, is an over ambitious goal, okay? I repeat that again. For example, having a goal of consistently making 10% a month all year round while you are currently losing is an over ambitious goal. So this is the problem. The problem is that you want to achieve this goal, but you're consistently losing. So what do you need to do? The next point is what? Perspective. Okay, I'm going to break this down, okay, in terms of what I mean by perspective. Someone might say that I'm being pessimistic by saying that by me saying that telling you achieving a 10% return month in, month out is a bad goal, okay? Someone might say I'm being pessimistic. However, think of it this way. How do you expect to start winning 100-meter sprint races against Ferdinand Omanyala, the fastest man in Africa, fastest man this year? I needed to give him a shout out because he's from Kenya. Or Usain Bolt next month after you have a record history of always losing it. So let me repeat that. How do you expect to start winning a 100-meter sprint race against people like Omanyala or Usain Bolt next month after you have a record of history of always losing in it? So you're coming out of this race, you're always losing. Then next month you come out with this ambitious goal that you're going to be number one and you want to achieve number one. My friend, that is not a good perspective you have in place. You can't just jump from being number last to being number one. There's a step-by-step process you need to go through, okay? So the goal is not impossible. Get me right. That goal is not impossible, okay? But it requires a step-by-step process. If I put it into my perspective, the goal should first be, how can I stop being in the last place and become top 4? So if you know, normally in a race, I think about 8 to 9 people in a sprint race. So if you're normally the last person, number 9, the goal is, how can I be top 5 or top 4, okay? After consistency there, after you become top 4 for quite some time, you'll start understanding how the winners are going, okay? I can slowly move up the ranks to become number 1 and find a way to continue being at the top, okay? So after consistently being at number 4, number 3, number 5, you can start becoming number 1 slowly and find ways of consistently staying at the top. Why am I saying that? Because whenever you get to the top, the people who are behind you are always going to be working hard to take your throne, okay? If you never, and this is a quote I learned from Tom Billy. He said, whenever you create an army, the world is going to create an opposing force, okay? So whenever you achieve a certain goal, the world is always going to set an opposing force and come after you. So same thing over here. Whenever you get to number 1, people are always going to find a way to take you out of that spot, okay? So that's perspective. Now, what's the solution? The goal in trading too, okay, should first be how to stop losing consistently, which has a lot to do with risk management and psychology. And then once you attain that, you move on to find a way to consistently make money month in, month out. So some people have been consistently losing. Your first goal should not be, how can I make 10%, 20% return? No. The first goal, which if you achieve, you should be very, very happy with yourself, is how can I stop losing money consistently? How can I start from a downward trajectory, how can I get into a plateau trajectory where I'm just consistently breaking even? That's a very important goal and a very big milestone for traders, okay? I remember once attaining this level, and this is the level you start understanding proper risk management and the right psychology. Remember, at the very point, the trading strategy might not really have much of a problem. The much problem has to deal with you in the terms of psychology and trade management, okay? So the goal in trading should first be to stop losing consistently and then find a way to continue making money consistently. So once you get into that plateau of consistently making money, the next goal is to how can I start going up this mountain of consistently making money, okay? So in a nutshell, what I've just explained to you is a vital hack, a vital life hack that I use in my day-to-day life, and I have borrowed it in my trading as well, okay? In life, we are always faced with problems, and sometimes we are faced actually with the similar problems, each and every one of us, but we always somehow have different outcomes. Why? Because we normally experience the same problem, have a certain perspective, different perspectives, and different perspectives will lead to different solutions. So I like to term this PPS, and I use it in my everyday life, in my normal life, be it relationships, be it trading, be it anything that I do. I normally use the PPS strategy: problem, perspective, solution. This is mainly because of the different perspectives we all uniquely have when we're approaching different problems. So we are all faced, as I said earlier on, faced with the same problem. Maybe the problem in trading, we're all achieving a losing streak, okay? Maybe we're all fearful, we're all greedy, okay? Those are the problems we're experiencing, but we'll all view it in different perspectives, and this is where many people tend to go away. Some people will say this is a scam. Some people will go and say that I can't trade anymore because trading is hard, because of the different perspective. But there's always that one person, the outlier, who will always say, this is a good challenge that has been presented to me. How can I find a solution to hack it, okay? So the solution is never the key, okay? The solution is not the key. The key here is perspective. We all come up with solutions, shitty ones to be exact. So most of us will come up with solutions, very, very shitty ones. If you actually listen to some people's ideas, you'll say, how did you come up with such an idea? Because it's out of this world. And this is because we lack great and unique perspective that leads to great solution. So remember, perspective is the key. Solution is always the outcome. How can we get a good perspective? How can we change our mindset to view problems in a different way, way that leads not for us to look at problems as problems, but problems as opportunities, okay? In business, the perspective is always about the future. What do I mean by that? Here's a good example. So most of you have heard about Blockbuster and Netflix. I want to use that as a very good example because of what is happening in today's world. So what is Blockbuster? Blockbuster is a company that existed in the 1990s, early 2000s. They were the big people who were doing retail in terms of movies in a very big way. They were the Amazons of the movie retail industry, okay? So what problem did they see in the market? They wanted to see how can they entertain the masses from home, okay? Perspective, how did they view it differently? People will love going to the stores to choose and get their own copy of movie DVDs in the long term, okay? So that's what they were looking at in the 1990s and in the 2000s. So what was the solution? Create a brick and mortar store where people can come and buy or rent movie DVDs and discs. So that's what they did. It was a very good solution. They were very big in the 1990s, very big in the 2000s. Actually, this time Netflix even approached them for them to buy them to become in-house for their solutions in how to distribute DVDs using mail, but they turned them down, laughing them out of the room, saying your strategy is never going to work. And what is the outcome right now? As of 2020, it is out of business with one store remaining versus their peak of 9,000 stores. So I think it was around 2004, 2005. They had more than 9,000 stores worldwide, okay? And the outcome right now is that they're out of business, okay? With only one store remaining. Imagine that. How can you go from 9,000 to one store remaining. Okay, it's because of the perspective they had, the solution they came up with, which was quite good at the time, but they didn't evolve with the markets. And that's what I was telling you on the trading plan. You need to evolve with the market. And where are they right now? They have one store remaining worldwide. So let's look at a different perspective. Let's look at Netflix and what they did different. So notice over here, they experience the same problem. How can they entertain the masses from home? If I go back to Blockbuster, it was the same thing. How can they entertain the masses from back at home? So the perspective that Netflix had that was different, Reed Hastings came up with this. People will want unlimited movies without having to leave the house. Okay, so that was the perspective he came up with, and this is the perspective that Blockbuster laughed them out of their offices when Netflix approached them. So what was the solution? What did they come up with? What is a money-making machine? It was to create a monthly subscription where people can watch unlimited movies without any advertisement. This might have sounded simple, but it was a very, very genius, out-of-the-box, unique solution that they came up with. What is the outcome that they have? They became a $300 billion company at their peak with over 200 million subscribers worldwide. Okay, so look at that. Same problem, different perspective, which will lead to a different solution, and of course you'll have a different and outstanding outcome. And that's what happened when Netflix came up with the perspective of subscription and how to do that, okay, using their model, which was quite brilliant. Trading is no different. We need to use the PPS solution. So I hope you're writing this down and you can use it in your day-to-day life. Always ask yourself, how am I thinking? Am I thinking out of the box? Because you really need that in trading, okay? So as I said here, trading is no different. We are all approaching the same market. We are all seeing the same thing. If you look at the gold market right now, it's the same market I'm watching, wherever it is right now. We are facing similar problems such as consistently losing and fighting bad psychological behavior such as fear, greed, FOMO, such stuff, okay? But few of us succeed atop others because of the perspective that they have towards market. So the reason why I am here, where I am today, why people like Gitosh, who we look up to, and why he is where he is today is because of the different perspective. He was able to look at different problems and come up with a different solution, okay? So I will share some of my trading philosophies, the things that I believe in towards the end over here, okay, that they help me stay at top of my game. And most of these trading philosophies are what help me put my trading psychological weaknesses in place, okay? So as I end it for the problem, perspective, and solution, and I get back to the trading plan, please take this home. It's something that has always helped me, and I always use it in my day-to-day life. So if you meet me out there, just be sure to tell me, Caleb, PPS, problem, perspective, solution, okay? Think different. So number 2, so that was number 1, talking about the trading goal. Number 2 is the trading plan. A trading plan is a step-by-step process that details how one should be able to achieve his or her trading goal that they want to achieve within a certain time frame, okay? So a trading plan is basically we're getting into the chunk, into the chunk of the meat where you're basically detailing what is the plan of achieving your certain goal, okay? I believe that a trading plan should have KPIs. A KPI is a key performance indicator. So your trading plan, if you come up with a plan, you need to have ways of how to measure how your plan is performing, whether it's good or bad. It's very important to measure. The outcome is never really important because if it's bad, if it's good, you're always going to come back down and go back to the drawing board. If it's good, you want to know how you can improve it and make it better. If it's bad, you want to know how you can improve it and make it from being bad to being good, okay? And then from being good to being great. This is because we want to know and measure that what is allowing us to perform well and effectively and making us perform badly, okay? So that's what I've just explained right now, okay? A trading journal and a backtester are good KPI tools, okay? This is because as you trade, you want to journal how effective or ineffective your trading plan is, okay? It's performing, whether it is through backtesting or forward testing. So whenever you're looking at a trading journal is a very, very good indicator, and that's how I was able to come up with the winning strategies that I normally use, because I used to do a lot of journaling. And journaling, this is another class. If I get into it, it's a whole different class that I think I'll do it another day, okay? So trading is quite detailed. You need to be very, very detailed when you're approaching trading. But a trading journal is, for me, is normally I'm taking screenshots of the markets and the trades that I'm taking, on a weekly basis, on a day-to-day basis. If you follow our Discord group or our WhatsApp group, you can be seeing that I always, week in, week out, share my trading journal and update with you what I'm observing in the markets and the trades that I'm taking, the build up to it, the trade management while I'm at it, while I'm in it, and how I came out of the trade, why I came out either as TP or as a stop loss, or if it was a manual exit, I'll also explain it, okay? So a trading journal will help me follow if I'm following my trading plan or not, okay? The back test, on the other hand, will give feedback between your back testing results compared to your forward testing. So what do I mean by that? When you normally do back test, what are you looking for? You're looking for things like POF, pattern occurrence frequency. You're looking for the average risk, the reward that you'll be using. You'll be looking for the hit rate that you'll be taking. You'll be looking for the pairs that perform well with your trading strategy, okay? You want to be looking for consecutive wins and losses. So there's a lot of things that we teach here that you're looking at when you're doing your back testing, okay? So these results will come out, and then you'll take your strategy, come and test it in the real market, forward testing, okay? So you'll get, at most, whenever you're starting out, of course, you'll get different results. And the forward test won't be as good as the back test, which is a very, very important data, okay? Important feedback, important information that you need to get out of trading, okay? This will help you come back to the drawing board and try and look at what is the disparity, what's the difference between my back testing and my forward testing, and how can I correct it. Once you sort that, you'll be able to create a good trading plan moving forward, okay? So these are very, very good KPI tools that I can suggest for you guys to use. Here at Financial Hub, we use certain softwares which help us create good trading journals and a good backtester that are effective and help us in trading, okay? So number 3, now if we come to number 3, we've talked about the trading goal, we've talked about the trading plan, okay? Trading goal, we've talked about the PPS, and we've expounded on it. On the trading plan, we've talked about KPIs and what you need to do when you're looking at the trading, okay? Now, trading strategy. A trading strategy, in my opinion, is a unique understanding and approach to the market that will effectively help you achieve your trading goal. Okay, so I repeat that again. A trading strategy is a unique understanding, your unique understanding and approach to the market that will effectively help you achieve your trading goals. So a strategy, now here you're coming to, it's your own unique understanding of the market. How do I approach the market? Some people are contrarian, like Taras is a bit contrarian. He'll look for trades that are going against the trend at times, sometimes are going towards the trend. I look for trend following strategies that are pushing markets towards the direction of the trend. So that's my unique understanding. Now I look for a strategy that is in my approach that coincides with my understanding of the market, how I view the market. Okay, we all view the markets differently, so you'll have different strategies at the end of the day. Okay, I believe that it should, so a trading strategy, I believe that it should detail out your trading approach to the market step by step. It should entail, 1, your trading patterns. What are the trading patterns you're looking for? Okay. 2, it should give out the trade signals to enter and to exit. What trading signal are you looking to enter? What trading signals will tell you to come out of a trade? Okay. Trading indicators and how to use them. It should entail those trading indicators and how to use them. Your trading strategy should also entail the most effective times to trade. For very important, it should define the trading times that you need to be trading. Okay, and last but not least, it should include a trade management framework. What is that? So whenever you take a trade, you need to have good trade management framework. Remember, I said earlier on, whenever you take a trade, objectivity comes out of the market and you become very, very subjective. Okay, so you want to look for a way that you can manage your trades as effectively as possible as you can. Okay, so that's the 3 things that I include in my trading strategy. I mean, the 5 things that I include in my trading strategy. And remember, a trading strategy should and must be back tested before it is forward tested. Okay, long term we never used to do this. We were laughing the other day with Taras and Ken, thinking, how did we used to trade without back testing our system? We were randomly getting results out of the market. We didn't understand what we were doing. Okay, so right now we trade data, and Taras insists of this a lot. Even in his trading plan, he said, trade data, not your opinions. Okay, you want to avoid trading your opinions as much as you can. And forward, so a system must be back tested before forward tested, and forward tested before it is considered a solid trading strategy for your live accounts. Okay, by forward test I mean you take a small account, without making these big mistakes. You want to do it on a small account that you're willing to risk. Do those things, okay? Use proper risk management, and then proper trade management, and then scale it up slowly, okay? You don't want to rush this process. It's a long process. And I like using the example of a medical student. A medical student, before they go into live trading, okay, they normally do the back test. And the back test is what? They'll go and do the studies. The studies take quite some years, 6 to 7 years. During that year time frame, or during that time period, okay, they'll be testing with what? They'll do with dead animals, okay, then sort of transition that into sort of live animals, and then transition that to now real humans. But before they get to the real humans, which is the live trading, they've gone through this process, okay? So the back test in their process is more or less the dead animals, looking at the anatomy, opening up the bodies, understanding where different parts are. The next step they're going to go is to forward test, which is sort of like live animals, okay? So testing live animals, doing different things with them, okay? So this is testing your trading account with a small account. And then last but not least, going into a live account is the last thing that you want to do, which is far ahead. Do not rush this process. It's so much ahead, not right now, which is basically dealing with the real body in medicine and in trading, now dealing with a good, substantial live account, okay? So that's on trading strategies. So let me show you an example of my strategy, trading strategy, okay? I'll show you how mine is. So this is Notion. I normally use Notion a lot. Notion is what I normally use to create my trading plan. I use it for journaling, for documenting, for my day-to-day tasks. So I use it for everything. So I'm always on Notion. The good thing about Notion is a free plan. So there's a free version and the paid version, but the free plan is also as effective depending on what you're doing, okay? So if I come, so you can see this is all my trading plan. I've outlined all these things, okay? So now I want to show you my trading strategy. Okay, I use a certain specific strategy that I'm normally using, and I've defined it. So definition of the strategy, I've just come and explained the direction of the trend is what I'm looking for. So if I scroll down, I don't want to get really into it. I trade mostly the flags. I trade a lot of flags. These are my A setups, okay? So this is what I'm normally looking for to trade. And if you come for our courses, if you come for our classes, I'll teach you how to use the flags and how to trade them. But before you come down to the flags, you need to understand the direction of a trend. You need to understand the Dow theory, how to approach it. We also use sometimes the Wyckoff theory as well, so it's also important to understand such stuff, okay, before you come down to the flag setups. And then the flag setups, I've sort of defined it using images, using also explanations, different types of flags. You'll see I've given examples because you want to be showing these examples in your trading plan and your strategy so that the mind can get used to it. Remember, your mind works as a machine, so it's repetitive in nature. Once you expose it to certain patterns, it sort of gets used to them and starts noticing them, okay? And then as I come down, you can see now flags and confluence, the A+ setups. I've combined them. I have 5 of them. The flags and the third trendline bounce, flags and the key levels, flags and the third bounce plus key levels, flags and counter trend lines, flags and the 3 push pattern, rare but great opportunity. So I've given many examples on these ones, and that's what I teach. Then I have my own approach to key levels. I have psychological key levels, I have launchpad key levels. These are all my perspective, things that I've created myself and how I approach the market, okay? So you want to be seeing that. Then I have different things, like I said, time frame. Choosing time frames of which to trade, okay? You need to have a HTF, TTF, and low LTF, which is a higher time frame, trading time frame, and your lower time frame. So I also explain this during my strategies. Look, I have the entries and exits, okay? So I don't want to be looking for no pending orders. So I have that detailed, okay? Catching tops and bottoms, I have plan on how to go against that. I have plans against market hopping, and this is all from experience. I learn from something, then I come and create a plan of it, of how I can go against it. So these are just weaknesses, and weaknesses are good things in the market because you learn from them, create a plan of how to counter them, and then you come up with a strategy, okay? So that's my detailed way of showing how my trading strategy is according to MSS. MSS for me just simply stands for market structure strategy, okay? So if you move on to the next thing, number 4, okay? So we've covered trading goal, we've covered trading plan, we've covered trading strategy. Now we are down to the risk management framework, and this is what Taras talked about last week. This should also be entailed in your trading plan, okay? So to me, a trading risk management framework is an effective approach that reduces the downside exposure of your trading account while at the same time increasing your upside exposure of the possible return in respect to your personal risk appetite, okay, thus giving you the highest possible return with the least downside drawdown. Quite simple. I know it's quite a long, extensive explanation I've said, but in a nutshell, that's what it does. A trading risk management framework is an effective approach that reduces the downside exposure of your trading account while at the same time increasing your upside exposure of the possible return in respect to your personal risk appetite, thus giving you the highest possible return with the least drawdown possible. Okay, so in a nutshell, that's basically what a risk management framework. You want to reduce your downside exposure while increasing your upside return. Okay, very, very important. If you go around the board, you'll find many hedge fund managers are the ones who are doing this. And many people have this myth and misconception of always saying high risk, high return. Okay, the big people who are trading billions of dollars are not taking high risk. They're taking the lowest possible risk because they're taking people's money into risk and looking for the highest return because it's very competitive out here. So you need to be looking for the highest return possible. Okay. From a personal understanding, a risk management framework should be adjusted with respect to your trading goals. Okay. Different strategies with different probabilistic returns. Okay. And your personal risk profile or personal risk appetite. Very important to take this into perspective. Your trading goal, different trading strategies with different probability returns, and your personal risk appetite. This is going to affect your risk management framework, and that's why different people might have the same strategy but different risk management framework because of the three things that I've talked about. For example, if you want to achieve a 10% return and someone else wants to achieve a 20% return, but you're all using the same strategy, what is going to be different? You're going to use a different risk management framework. Okay, you might risk maybe less so that you can get a higher return. Maybe you might reduce the number of trades you're taking. You might be conservative. Some people might be aggressive. So you want to change that in terms of how your trading goal is. Okay, very, very important. So let me show you an example of my risk management framework. I won't show you the detailed one. I'll just show you a rough one that I have. Okay, so I'll come back to Notion, go back to my risk management. So if I do this drop down, okay, there's more detailed things that we normally talk about. Okay, but I've adjusted mine. You can see this, what I've said over here. Let's say, for example, I currently have main ways I approach risk management, keeping my risk profile in check. Risk not more than 2% per trades on my DFPs. So DFP is a certain type of flag that I'm normally trading. This has been adjusted to suit the current trading goals that I have. You can see I've written this for everything. Risk not more than 1% per trade on the CFP. Okay, I have a maximum of 2% daily risk. This has been adjusted to suit the current goal. Okay, I have a maximum 4% market exposure at any given time. I have a minimum of 1:2 risk 1:2 risk reward per trade. Okay, and risk reward over here should be dynamic, not fixed. Always know where you're coming out before entering the market. So that's just a rule I have philosophically. Okay, move stop loss to break even once market has moved 50% to target. Do not let 50% target turn into 100% loss. So these are just different risk management frameworks that I have in place to help me in terms of the current goals that I'm trying to achieve. Later on, once my goals change and I improve, maybe I want a different type of goal, I'm going to adjust this. Maybe my risk exposure might reduce, maybe it might increase. So as I said, it's very personal. Before I go to a 4% market exposure at any given time maximum, it took me a very long time. Okay, I needed to do back testing to get data from my system before I did those adjustments. Okay, so that's mine, and that's my sort of risk management framework. And it was very important for me to show you that so that you can understand how I approach and how my approach is quite different from maybe yours. Okay, and last but not least, trading philosophy. A trading philosophy is a personal, unique understanding of how the markets and life at large work, which then act as a guiding principle for behavior. Okay, I repeat, a trading philosophy is a personal, unique understanding of how the markets and life at large work, which then act as a guiding principle for behavior. So remember, trading philosophies you're going to get once you approach life trading. You're going to get gems out of life and out of things, okay? And those will act as trading principles and trading philosophies that you're going to use to guide your behavior moving forward, in terms of trading, in terms of life as well. And I'll show you a few examples that I have, okay? Philosophy for me are gems that we pick along the way as we progress through life that gives us a better understanding of how to live a meaningful life. So it is very important to take that into heart, okay? I like philosophy. I love reading philosophy, looking at the likes of Seneca, Plato, Epicurus, and such people, even the modern day living philosophers, people like what's his name, Jordan Peterson, okay? Such people, understanding how these people are looking and their different perspectives in life, okay? And understanding how they're approaching life and how is it meaningful to them. You'll understand that we all have different philosophies, but we're all living a meaningful life, okay? So in trading, it's also the same. How can I get meaningful gems that can help me approach and make certain decisions in the market in a principled manner? And Ray Dalio has really taught me this. Ray Dalio to me is a trading philosopher. He's created these trading philosophies, and actually I have his book over here, okay? It's called Principles, a very, very huge book. I've read all of it. Very, very good and important gems that I learned along the way. I've learned from him, and if you get time, you can get that book and learn what he's talked about, the principles. He's talked about life principles and work principles. He's not really gotten deep into trading. He's brought out a trading book that we also have. I think Ken has it, about what's it called? Taras, the book that the one Changing World Order. So that's the recent book that he has, and he's talked more about trading and approaching markets using backtested data, looking at data 500 years back and how you can use it in the day-to-day trading, okay? So philosophy, very, very important. Trading philosophies for me tend to incorporate principles that help me keep my trading psychology in check, okay? Let me show you examples of this. So if you go down here and I show you examples from my own personal trading philosophies, okay, and how do I use them, how they help me psychologically, okay? So if I show you an example here, for example, one of my principles, always know where you're getting out before you get in. Study the end game before starting to play, okay? This ensures that I reduce irrationality in trading. When I look at the end game, how is it going to help me? I want to rehearse in my mind how to handle each move in the market before it hits target. Remember, I'm a long-term trader, and I keep saying this a lot. If you look at the trades that I have been having running for the past 2 weeks, I've had gold trade running for the past 2 weeks, which is running quite well in profit. And if we look at it somewhere here, let's see. So I have a gold trade running. Here it is. Took this trade some time back, about 2 weeks ago. This was on the 16th May 2022. So the other day, about 2 weeks ago. Today is the 30th of May. So those are 2 weeks running, okay? You can see here it's still running. So those are 2 weeks running. On another trade here, I have a Dow Jones trade that is running as well. And you can see here it's running quite in profit. And we're still looking for market to continue moving to the upside. So why am I showing you that? Because I'm showing you that I'm a long-term trader. Before I entered that trade, I had rehearsed in my mind how I'm going to rehearse each and every move. Like for example, right now on gold, I'm looking for gold to move further down to the 1830 level. Yes, I'm long in it. I'm not looking to come out of that trade. It came into that trade at the $1,800 mark, okay? So along the way, I've already rehearsed where I'm going to look for market to break certain levels, correct to certain levels, continue to move out, move back up, or move back down, okay? And I'm expecting a correction that to come back about the 1830, 1825 level, where I look to buy again, okay? So I'm just moving like that, and all this, I had rehearsed it in my mind before I got into that trade, okay? So keenly know exactly how much is at risk, and in each and every trade, make sure that the position sizing is right, okay? So you always want to put this into perspective. This will help you not to become irrational. What do I mean by that? If you do not look at the proper risk management you put in place, you take a big risk in the market. trust you me, you lose rationality and start hoping in the markets for the markets to do what you expect it to do, and you do not want to have such an approach. Expectations in the market is not a good thing. You want to be very open-minded, free spirit, let the market go where the market will go, because that's what will happen at the end of the day. The market won't go to where you want it to go. On another philosophy that I have, the dead cannot be brought back to life. This ensures that I have proper risk management in place. So you can see here I've told myself, survive, survive, survive. The only way to do this is to have proper risk management in place. Imagine you're going to the shamba, to maybe you have a land that you're cultivating and you're walking towards it, but you do not have your djembe in place. So what will happen at the end of the day? Let's say you're walking and someone takes you, and we normally call this here at the office, we normally like joking and saying, umepigwa ngeta, ulikuwa unaenda grogo, and someone picked you ngeta along the way. So let's say you're walking with this axe of yours or this djembe, and along the way you're going to grogo and someone snatches your djembe. So even this shamba you're going to, you'll just get to your shamba, stand there and look at it. There's nothing much you can do. So that's the same thing we're talking about trading. Always survive by having good risk management. And Taras is here laughing because we've gone through this a lot of times, telling sometimes when the trade is going against us, we just like joking and saying, hey, loan me pigo ngeta pale grogo. So it's just some banter. Trading is all about creating meaning out of it. Even when you're having losses, create meaning out of it. And these are most of the things I have. You can see here, I've just listed for you guys 10 of them. If I just say here, psychological risks are much more deadlier to our performance than systematic risks, okay? Just as the subconscious is stronger as compared to the conscious mind. What do I mean as this? And remember, this is all philosophies. So psychological risks are much more worse than systematic risk. For example, the fear of losing money is much more worse than systematic risk. The fear of losing 1 or 2% costs much more than actually taking the risk and losing on it. Why is that? If I take a risk, okay, I'm risking 1%, okay? I have a good risk reward of 1:4. If I lose, I'll lose 1%. If I win, I'll make a 4% return, okay? But people who tend to not take that trade are having psychological risk, which is fear, okay? The systematic risk is 1%. The fear of losing is just losing 1% and you can make a 4% return. So psychological risks to me are far much worse than systematic risks, okay? So I won't go into all of this. So there are much more trading philosophies that I have that I've picked along the way. These are just 10 of them, but I have much more that help guide me in my trading arena while I'm trading, okay? And as I come to an end, some home takeaways out of what I've just shared with you, okay? A trading plan is personal and can never be fully duplicated. Remember, as much as I've shown you my plan, you cannot duplicate my plan. You might try, but trust me, my friend, it will not get you very far, okay? So try as much to be original and create your own trading plan. Number 2, a trading plan helps you remain objective at all times, avoiding the subjective approach that we are all victim of. Remember, we all fall weak of human weaknesses, okay? We all have weaknesses, and one way or another, we are always going to be fall victim of them. So a trading plan will help me avoid that and become very objective in the market. A bad trading plan is better than no plan. Talked about this. It's always better to have a bad plan than to have no plan, because in that way you'll know whenever you get lost, okay? Number 4, if you do not follow the plan, even if you are in profit, you have failed. I talked about this. Having a good trade outcome, which is a goal, which is a good return, whenever you had no plan, is much worse than having a bad plan, okay? So try as much not to have this. Create a trading plan. Even if you fail and even if you lose, while having a certain trading plan is a much better approach than having no plan at all, okay? And last but not least, a trading plan should entail what? A great trading goal, a great trading plan, which is the description, a great trading strategy, a great risk management framework, and last, a great trading philosophy, okay? Or philosophies that help you keep you in check and become objective, okay? So as we end this video, as we end this session, I want to leave a short video here, okay, that talks about problems that we normally use while achieving, or while we want to achieve a certain goal. What is the plan, or how can we approach this using different perspectives? So this is just a simple video, okay? It's just a short one, not even about trading, just in life. It's about ants and how they approach different problems and how you can use it in your approach, okay? So just it's about a minute or two, and it will give you a different perspective towards your approach, okay? So here it goes.
Problem solving is a method teachers can use to guide students through any kind of problem. There are 4 steps to problem solving. Define the problem, make a plan, put the plan into action, and check the result. As an example, you'll see how these ants use the 4 steps. The first step is to clearly define the problem. To understand what the goal is and what is keeping you from reaching that goal. The ants want to move this cookie into their anthill, but it's too big to fit. The second step is to make a plan for solving the problem. This step includes talking about information and ideas that will be helpful. The ants decide to break the cookie into small pieces and move them into their anthill. The third step is to put the plan into action. They break up the cookie and move the pieces. And the fourth step is to check the result. It looks like it's working. Sometimes the plan does not solve the problem. For example, this piece is still too big to fit. But that's okay. The 4 steps may need to be done more than once. It's an ongoing process until a solution is found. Define the problem. Make a plan. Put the plan into action and check the result.
So yeah, guys, that's simply it. So it's just a bit of banter towards the end. I know it's nothing to deal with trading, but whenever you approach trading, I said it's normally philosophical. And you want to learn from every perspective in life. If you can observe ants, if you can observe the animals and bring those gems that you can learn from them and bring it towards your trading, then it can always help you. But remember, at the very end, as we come to an end, as I said over here on my right corner, learning never ends. Okay, so learning is always an ongoing process. Creating a trading plan is always an ongoing process. So this is something you never really stop doing at the very end of the day. Okay, so yeah, so that's pretty much it. Thank you all for tuning in. Everyone who's come, I can see Johnny Mora, Kimani, Big Mike, Victor, Brian Mugo, El Chapo, Michael Kinodia, Marilyn Mwende. Marilyn, please continue doing this. Ladies are very few in this, and whenever we see ladies, we keep telling them to continue pushing on. And the other people, I can't really see their names. No, here it is, I can. Yeah, El Chapo, Gideon, Kibet, Marilyn, Michael Kinodia, Mudoni Kariti. Mudoni, we've been with her for quite some time, so shout out to you. Continue pushing. Rita, continue pushing. Nesh and Victor Muremi. Thank you all for joining. I'll see you guys soon, and have a wonderful week and a wonderful trading season. So see ya. Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.